The Nasdaq crossed 9,000 for the first time today. Our next guest says not a bad time, however, to have some cash on hand. George Young is the portfolio manager of the Villere Balanced Fund. He joins us now to discuss. George, good to talk to you again. So I just want to start with your overall outlook on the market right now. Certainly, we've seen quite a rally in the last 6 weeks or so. You mentioned you have about 15% cash in both of your portfolios right now. Are you feeling a little cautious, or are you just looking for some better opportunities?
I think that's a good way to put it, both cautious and there are better opportunities out there. The problem is we're not seeing that many things we want to buy. We have our favorites that we've held for some time, but I think as everybody knows, this has been a fantastic year. I think the best on record since 1997, and we might eclipse that on the S&P terms. So it's making us a little bit cautious. So as you say, we've got about 15% cash right now. We're always looking for other opportunities. And sure, there'll be some things that happen because this market, as we know, stocks by definition are somewhat volatile.
Yeah, Jared Villere here. Just asking about the composition of your portfolio and how that may have changed over the year, because we saw this rise in value in cyclicals starting in about September, kind of with a different interest rate regime, at least with the 10-year yield marching steadily upwards, up about 20, 30 basis points this quarter alone. What does that dynamic look like, and how do you see that playing out into 2020?
Well, we've got a little bit more concentrated portfolio. So we've got about 20 to 25 names in each of our portfolios right now. And what that means, we've seen a little bit more of a push towards technology. That's the largest segment within the S&P 500. So that's done incredibly well in the last 3 months. And that's something that we've seen that skewed the portfolio a little bit. One thing that's important that everybody's got to remember is taxes play an important role here. So it's one thing if you've got a series of holdings in your IRA, you of course don't pay any taxes there. But here we try to hold a little bit longer, meaning 3 to 5 years, something like that. And that's why it's important. And we're enabled to be able to hold smaller cap stocks that offer more growth. So that's generally where we see the opportunity. Again, the Russell 2000's not done that well in the last couple of years. It's averaged about 6% for each of the last 2 years. So it's weak this year, relatively speaking. And also, let's not forget the fourth quarter of 2018. So you've got to be a little bit guarded right now.
Hey, George, Brian Chung here. So you're talking about small caps just now. In terms of investment strategies for 2020, is that going to continue to be the case where you're kind of favoring those blue chip stocks over those small caps? And are there certain pockets even within those subsects in technology, for example, where you like the opportunities in the next year?
No, we really stay more in the small mid-cap area. That's where we seem to find opportunities over the year. And again, that's what's undervalued as a general rule at the moment. So our better course is to hold 15% right now. There will be some opportunities. Somebody missteps. They have a temporary lack of earnings realized. They have a change of CEOs. Their product is temporarily out of favor for some reason. There's a lot of things that can happen in the stock market. So we prefer to keep a number of stocks. We've got about 10 on our radar right now. They're watching and monitoring, getting to know the management, understand the goods they provide, the services they provide, to see if it fits into what we like.
Now, George, I want to ask about one of your names here we've discussed previously. That's First Hawaiian, because if you look at the Russell 2000 in general, it's, I wouldn't say mostly, but about 20% of it is smaller regional banks. So you have First Hawaiian as a name you like. Are there other regional banks? You mentioned there's 10 names you're looking at. Is regional banking an area, as the market seems to price in maybe a little bit of a turn in the economy next year, a space that you're finding some interest in?
Yeah, we do. And again, going back to our theme of small and mid-cap stocks, we like regional banks, which by definition are smaller than the large mega banks. And again, remember, these have an opportunity to be bought out. So First Hawaiian is one that was bought out some years ago. It's a little bit of an anomaly. So it's truly independent now. It was owned by a French bank for some period of time. The other one that I like happens to be in New Jersey. So obviously the other end of the country, Carney, K-R-N-Y is the symbol. That's one that was a savings and loan. It was demutualized, and it's one that's very small, meaning it's about $1.5 billion market cap. So it's one that we've owned for some years. Very steady growth, low delinquent loans in a good area of the country that's going to continue to grow. So yes, that's another one we like a lot.
That's right across the river from us here in Lower Manhattan. All right, George Young with the Villere Balanced Fund. Thanks so much for stopping by. Have a great New Year. We'll talk to you in 2020.
Thank you. Bye-bye.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.